We have people like James Dauma saying he was absolutely delighted with the call, and others saying it was Tesla's worst call in a long time. For me, I think there were some really great things we learned about Tesla yesterday that were new, and then some not so great things that, frankly, I was not expecting. Elon was very chatty and gave us some great insight into some of the most crucial aspects of Tesla that did give me some rabbit holes to get into, and we'll start unpacking some of that today and then the rest in the weeks ahead. To start, I want to clarify some things on the financial side. I did make it clear on X my interest in Tesla's financials right now is very low, mostly because we know what to expect. There are not going to be surprises to the upside until robotaxi scales, unsupervised starts deploying to customer cars, and the FSD take rate jumps meaningfully. Vibov said the FSD take rate was 12%, but his phrasing left much to be desired. He said the total paid FSD customer base is still small, around 12% of the current fleet. But is that the entire fleet, or just where FSD is available? If it's the entire fleet, since he did not narrow it down, that would be about 960,000 paying customers of FSD. But of course, it would obviously be less than that if he meant only the fleet where FSD is available, so I do wish he would have been more specific. On the financials, just know a few line items were new record highs, but that was to be expected given the rush thanks to the end of the tax credit. Free cash flow was a record $4 billion, and part of that was driven by Tesla clearing out inventory as global days of supply was down to 10, the lowest reading since Q3 2022. Overall though, the financials were solid. Good, but given the circumstances, I know many were expecting more of a blowout type of quarter, as most of the Tesla retail analysts erred on the optimistic side this time around. But there are some explanations and things to point out. There was a $238 million restructuring charge that thankfully they clarified on the call. It sounds like it's mostly from dojo changes and some layoffs and adjusting compensation for that program given the shift toward AI5 alone and away from Dojo separately as we knew it. We also had Tesla's spending at record high both for research and development and SG&A. R&D was only $40 million higher than Q3, but SG&A was about $200 million higher, and that was largely from legal case proceedings and preparing for the shareholder meeting. So thank you, activist McCormick, for that, because remember, those preparations for the shareholder meeting involved that special committee that's been busy all year, working on Elon's bridge incentive if things in Delaware go south, and developing his new incentive package, plus exploring if there are any possible ways to get Elon that 25% voting control of Tesla with something like supermajority voting shares. But since Tesla's already public and went public without it, they said there's no way to do that. Personally, I'm happy to see Tesla spending on R&D because they do it hyper efficiently, and it means they see something worthy of spending on. And one other thing not many talked about, Tesla paid 29% in taxes this quarter, which is much higher than usual. This was most likely a shift in jurisdictional earnings, meaning the profits moved to higher tax regions like the EU or China. There are other factors like things we've talked about in the past, the valuation allowances on deferred tax assets, and then other fluctuations with tax credits. But just know this was Tesla's second highest tax rate for a quarter ever. Usually the rate is down somewhere around 22%. On the bright side, Tesla's services and other line operated at a 10.5% margin, which was the highest ever, beating the prior high of 8.8% in Q3 2024. And Tesla pulled this off despite the fact that robotaxi costs to operate the network are included in the services and other category. I've been eager to see the regulatory credit line, which we've been expecting to trend toward zero over time given policy changes we've talked about, and that line came in at $417 million, the lowest reading since Q3 2022. So the regulatory credits are indeed trending down, and I am expecting that trend to continue. I was pleased to learn that Tesla's now spending more on equity performance awards for AI talent, doing what it can to retain key employees amidst these AI wars. I want to share these charts that CERN Basher put together the first first one is Tesla's affordability over time. This one is the change in automotive ASPs. A quarterly increase is shown in blue and a quarterly decrease is shown in orange. But note the trend. Over the past 7 years or so, Tesla's average ASP has gone from $70,000 down to $40,000, down to just over $40,000. However, those reductions have mostly plateaued over the past few years. This one is the change in cost of goods sold. And over the same time frame, Tesla's average COGS went from $54,000 down to just above $35,000. And again, the game of removing pennies has mostly stalled out for the past few years. Which brings us to Tesla's profitability per EV, which is just the ASP minus the COGS. And right now, this reading sits at about $6,000 of profit per EV sold. But note the trend reversal. The last 2 quarters, Tesla has been increasing this reading. And given all of the circumstances right now, I would expect this number to continually chop sideways really for the next 12 months or so. So look, I'm not taking anything away from Tesla here. It was a solid financial quarter given the headwinds like tariffs, but I think it was also distorted to the upside given the tax credit removal. So let's see where Tesla's efficiencies really are over the next few quarters. And speaking of efficiency, that's part of why I'm pursuing this other venture. I've said before, Elon's commentary about manufacturing has really encouraged me to try to bring something physical to market. But my primary messaging behind this is I want everyone to understand the core benefit of training is not physical, it's actually mental. You will be a completely different person with just a bit of resistance training regularly. And second, even if you have 20 minutes a day, that's really all you need. I'm 36, completely natural, and have not been to the gym in over 3 years. And I'm sharing this not to be that guy, but just to encourage you, a little bit can go a long way. Just like a little preparation before bed can go a long way with quality sleep, thanks to things like AGZ. I'm telling you, finishing Electrified around 9 p.m. after staring at screens all day makes it tough to wind down, so I needed to develop a nightly routine, and now I have one that involves breathing, mobility, a warm shower, and sipping AGZ all throughout. AGZ has an herbal flavor, and there are no artificial flavors, artificial sweeteners, gluten, dairy, or added sugar. It is from the highly talented and researched team of AG1, a sponsor of this channel, and it's designed to help you wake up refreshed with ingredients like saffron, unlike many other options that leave you groggy the next morning. AGZ has no melatonin and instead uses clinically studied calming adaptogens, herbs, and minerals. So if you want to turn down the stress and focus on the rest, you can use my link in the description or scan the QR code on the screen to get a free frother with your first purchase of AGZ. And seriously guys, thank you for supporting the channel all this time. It's true, I would not be able to do any of this without you. Alright, now for the more juicy stuff, in my opinion. And remember, I am a finance guy, but it's just now is not the time to focus on financials for Tesla. They have enough cash, over $40 billion, to fund this next AI wave, and so for now, we're good. To start, we really need to drive the point home about this intelligence density per watt, not just because Elon keeps bringing it up, but because we just learned it's this efficiency at Tesla that will be the thing that unlocks unsupervised and all the other features we want, like banish and actually smart summon that works. Elon said Tesla's intelligence per gigabyte is an order of magnitude better than anyone else. This matters not just for efficiency's sake, but because Ashok just told us how hard it is to fit certain things on AI4 directly. Things like banish and like reasoning for the model that we don't even have yet. Which I find interesting because so many people testing V14 talk about sentience when in reality, the real thing that will make cars feel that way, having the ability to reason and make decisions using logic, is not even added to the model yet. Ashok said this will be added by the end of this year for sure. It could be 14.3 or 14.4. The team said the car will think about which parking spot to pick and it will find empty spots better than a human. And since the challenge of adding banish and this reasoning is getting it to fit or to run on AI4 locally, think about the issues Tesla would be having if they were not so incredibly efficient. AI4 probably wouldn't be enough for unsupervised and Hardware 3 would not have any hope of this new V14 Lite that's supposed to roll out to Hardware 3 owners sometime in Q2 2026. And looking to AI5, the extra headroom and capacity of that chip are going to unlock basically everything and every feature and every upgrade that Tesla will want to offer for the entire unsupervised experience. To be clear, I do think AI4 will be able to handle most, if not all of it, but it just won't be as easy, and that's the reason we're still waiting for things like Banish. We need reasoning first, and it's a challenge for the team to fit it on AI4. For major FSD software updates, priority 1 for Tesla is safety, and then from there, Tesla starts to refine for comfort, which are the iterations Tesla's making now with version 14. But so far, Elon is lying or is misinformed because many of our cars are on the advanced software setting and we still don't have V14. I did reset my car, I've tested everything I can think of, and I still don't have it. But probably the most exciting and encouraging thing for me was what Elon said about solving for unsupervised.
At this point, I feel, essentially 100% confident. I say not essentially, 100% confident that we can solve unsupervised full self-driving at a safety level much greater than human.
He also said because of this newfound clarity, he plans to expand production at Tesla as fast as the supply chain will allow, in expectations of demand jumping thanks to unsupervised. So look, most of us in the retail community have said for months and years Tesla will definitely solve unsupervised, and we were 100% confident in those statements. The problem is none of us knew even a fraction of what Elon, Ashok, and the company were seeing every day. On the outside, we just think certain things are inevitable or foregone conclusions because Tesla has continually done the impossible. But in reality, it's still a probability game, and with Tesla pursuing unsupervised in a novel way, end-to-end nets, no LiDAR, Tesla just didn't know what it didn't know. But now, likely from what they're seeing with version 14, Elon is certain, beyond a shadow of a doubt, Tesla is going to solve this. Which means finally, after a decade of terrible predictions, he's going to be right this time around. What's that they say about broken clocks? Just kidding though, Elon. I know you watch every Electrified episode, so love you. Keep it up. But seriously, since the next 2 to 3 years at Tesla hinge on FSD driving profitability at Tesla, this is massive news and should be a major boost of confidence for anyone still having doubts. And time will tell on this new production ramp thanks to clarity on solving unsupervised. I still don't think that'll happen meaningfully until the second half of next year. Elon touted a shockwave again about how fast robotaxis will take off, but we are now fully in prove it mode. So until Tesla starts scaling robotaxis meaningfully, or offering unsupervised, or building up significant inventory numbers ahead of this shockwave, it's all just words in the ether. And listen, I'm not saying Elon's words don't matter, I'm just saying on this specific topic, we've given Elon plenty of grace and patience here over the years. It really is time to put up or shut up. Another surprise, Elon said Tesla is going to be increasing the parameter count by an order of magnitude, and that's not yet in version 14. So I certainly was not expecting this. The communication and everything pointed to version 14 being the model with the 10x parameter count, and we thought that was the reason why 14 was driving like it had seen some stuff. All of that extra nuance being analyzed as we talked about for months. So how many more parameters does V14 have relative to 13? At this point, we have no idea. And then further, when does Tesla plan to include these extra parameters? Why didn't they do it with version 14? So I have many questions here, but I also think it's a somewhat bullish surprise since V14 is already feeling so capable without that 10x in parameters. But then on the bearish side, when those do get added in, Tesla will likely need significant refining of that new model size. But it was during this section when Elon raved about the radical improvements still to come with version 14 and future point releases, so there's still a lot of firepower still to come with future versions of 14. And that's in addition to the expected comfort refinements, which has to be one of the biggest takeaways of the call, given how important this is to Tesla and the stock the next few years. And I think this is precisely why people like James Douma were so pleased with the call. When focusing on what matters most, the AI technology progress, everything seems to be going swimmingly, and the confidence of the team is definitely higher than ever. And thankfully, Elon acknowledged it all comes down to if the customers can text in the car. Whenever Tesla can offer that, that is when they need to be ready to have production ramped, and it still feels like sometime in the back half of 2026 is when that could finally become a reality. To touch on some of the downside or bearish shifts from the call, first with FSD, Elon said we should expect safety monitors in each new city for the next 6 to 8 metro areas for roughly the first 3 months to make sure they don't miss anything like weird intersections. A big question we've all had is at what point will Tesla be able to flip the proverbial switch and scale robotaxi more generally without having to validate each city for months? And it's pretty clear that that will not be happening at all this year, which again, in the grand scheme of things, zooming out should not be a surprise since we know they're being paranoid about safety and they warned us that would be the case. But I'm sharing to prepare everyone for all of the chirps that Tesla's FSD is a scam because there are still safety monitors. It sounds like safety monitors will be part of the story for at least the next 6 months in each new city. But on the bright side, Elon said Tesla expects to be in 8 to 10 metro areas by the end of the year, depending on regulations, which means 6 to 8 new markets in roughly 68 days. That means on the optimistic side, if Tesla expands to 8 new ones, that would be 1 new city every 8.5 days for the rest of the year. And even on the lower side of 6 new cities, that would be 1 every 11.3 days. Elon did say there should be no safety monitors in some parts of Austin by the end of the year, which was slightly more bearish than his last comment that was no safety monitors at all in Austin by the end of the year. Now it's only parts of Austin where they'll be removed. And again, they'll be back for each new city for the foreseeable future. Tesla called out they hit 250,000 robotaxi miles in Austin, and given the service has been running for 122 days, that's an average of 2,049 miles per day. Then in the Bay Area, Tesla has already hit 1 million miles in just the last 84 days of that ride-hail service since it's been operational. That's 11,900 miles per day on average. In Austin, Tesla has maybe 20 or 30 cars operating right now, and in the Bay Area on August 6th, Elon said they were working as fast as possible to get to 100 plus Teslas operating there for ride-hail. So if we go with 75 Teslas in the Bay Area, that would be about 158 miles per car per day. Then if we assume 25 cars in Austin, that would be about 82 miles per car per day. Now, I'm not going to go further and run a bunch of extrapolations for pricing and cost per mile and revenue yet, given how early it is, and these numbers are certainly going to change, but I just thought it was some interesting context. Now, Elon's monologue about AI5, TSMC, Samsung, and his weekly meetings with the design team the past few months was super illuminating for me. I will say I am making plans to trade in my car whenever AI5 starts shipping. But yes, some of that is certainly just for purposes of the channel so I can be up with the latest of what Tesla's working on. However, to be clear, Tesla said AI4 should be able to achieve sentience and unsupervised FSD with the full feature set, including things like banish, etc. But by some metrics, AI5 should be 40 times better, 40, than AI4, and the real breakthrough of this chip is what the team has been able to delete, not what they've been able to add. And I think the magic of why Tesla is going to pull this off was shown here with how tightly integrated the hardware and software teams are. Tesla's AI5 team designs the hardware to address all of the pain points on the software side. No one else is doing the entire stack all the way through and calibrating everything in the real world like Tesla. Tesla has deleted the traditional GPU in AI4. They deleted the image signal processor, the ISP, which Yoon Tasai said people don't realize how baller of a move it is to do that. For AI purely designed around photon count, the ISP is just a dead area. Now, usually an ISP is crucial for chips because it's what actually converts those raw photons to a polished image for humans to look at and consume. But because Tesla's vision approach relies on its end-to-end nets training directly on sensor data, they don't need any of that conversion. The neural nets just need the raw photons. So, part deleted. And generally, an ISP can take up to 20% of the die area in chips that are focused on cameras. So now, Tesla can reallocate those transistors to more AI compute cores because Tesla's stack is so hyper-specialized for raw AI vision. Plus, an ISP can add latency, power consumption, and possible information loss from that conversion process. And Elon said there's a long list of deletions that are very important. And again, all of this is enabled by the software team telling the hardware team what the software pain points are, so the hardware team can work to alleviate them. And this is all part of what Elon was referring to with his radical commentary, saying they're focused on radical simplicity with AI 5, along with some other radical improvements with version 14. Just think of the progression of the Raptor engine at SpaceX. Elon also said we can actually fit AI 5 in a half reticle and with good margin for the traces from the memory to the trip accelerators. A reticle can be thought of as the canvas size for etching onto silicon wafers. So a reticle is basically the biggest area one of those giant photolithography machines can expose in one shot while making a chip. So AI5 fitting in a half reticle means the AI5 die, the actual chip area, only takes up half of that space. And of course, smaller dies means lower costs per chip, higher manufacturing yields, aka fewer defects, and easier scaling. So basically, Tesla can make more AI5 chips per wafer. And then the traces are just thin metal wires. Think of highways on the chip, as Elon said, that route the electrical signals between different components. And the good margin means there's plenty of space left on the die for these interconnects, and that's important because chip design can often be limited by routing congestion. So in short, AI5 is shaping up to be something special. Tesla's going to have both Samsung and TSMC make this chip, both in the United States, which in my opinion is a significant supply chain de-risker given political tensions. Samsung will make it in Texas and TSMC in Arizona. And any extra chip capacity can be used in Tesla's data center like they're already doing with AI4. Elon said AI5 will be the best performance per watt, maybe by a factor of 2 or 3, and the best performance per dollar by maybe a factor of 10. So when your friends question you, why are you still so bullish on Tesla and autonomy, just ask them what they can tell you about AI5. Because remember, outside of our little Tesla bubble where this stuff is all so crucial, most people, even Tesla customers, will never even know these chips exist. But we know it's the actual product along with AI4 that allows Tesla to do what it can do with FSD. And for me, it was the optimist commentary that was both quite encouraging, but also brought the biggest timeline expectation shift for me. Tesla now is not planning to show off a V3 prototype until Q1 2026. And at that point, they hope to have a production intent prototype in February or March to show off. But don't forget, at one point we were told to expect a few thousand Optimus bots to be produced by the end of this year. So that's seemingly off the table as Tesla shifts its focus to this new V3 version. Elon said over and over on the call how hard of a problem Optimus is, and specifically how hard the hand engineering is, as we've known. And if the prototype for V3 is taking this long, we really need to recalibrate how long it's going to take that prototype to get into mass production. Because we all know prototypes are easy, production is hard. But in this case, even the prototype is not easy. The prototype is incredibly hard. Now, on the bright side, Tesla told us they're building a 1 million unit production line for Optimus now with the hope to start production toward the end of next year. So this means Tesla believes it has a version that will be ready to enter production next year. But for me, I think these timelines are very loose and they're just guesses, and I've seen plenty of people saying that the ramp will be fast, which I very much disagree with. Tesla is going to have to create nearly this entire supply chain from scratch, and as always, it will be as slow as the unluckiest part of production. And listen, on the call, Elon said himself that the production ramp will take a while. So realistically, at this point, baking in delays and the unknown unknowns, I do not think we see even a few thousand bots produced until 2027. From there, I think the Optimus ramp throughout 2027 will be slow, and that Tesla won't see any meaningful revenue or profits from Optimus until 2028 and beyond. So I do think that's something people really need to sit with, especially if you've been more bullish on the Optimus program in the short term. But all this to say, there is a silver lining. Tesla could easily do a more primitive hand, get to market much faster, enter production this year, do a bunch of demos, and get everyone talking and excited. However, in true Tesla fashion, they are solving for the end game. Just like autonomy, Tesla's not trying to solve for level 3 or level 4. It's always been about going full speed to solving level 5 as soon as possible. It's going to be exactly the same with Optimus. Tesla is solving for a humanoid form factor that can do anything and everything a human can do, including things like surgery, which Elon actually called out on the call. So find me another bot company that's going to have hands as dexterous and capable as a human that can actually make them at scale. I'll wait because right now they do not exist. Now sure, Figure or others might get to market first depending on how you define that, but first will not matter in this market. Just like Waymo being first is not going to matter at all in the end. And it's this new human-like hand that will unlock the true, nearly unlimited addressable market of humanoids, and that is what Tesla is solving for. Not just a subset of that addressable market so they can raise money or claim they were first or whatever else. Tesla doesn't do that. They are playing the long game. And you can mock it if you want, but this is what Elon calls the infinite money glitch. It's going to take maybe a decade to play out, in my opinion, but I know another technology that took Tesla a decade to figure out, and that one is finally on the brink of actually landing and coming to fruition. I'm, of course, talking about FSD. And another decade from now, maybe sooner, maybe 5 years or so, the world will get to see the fruits of Tesla's labor with Optimus too. But I'm just saying, until then, I think we need to be realistic about what to expect. Because Elon said Optimus V2 was almost impossible to manufacture, so version 3, with the complexity of the new hand, is certainly not a done deal. It's an immense undertaking, and there are definitely going to be delays and setbacks. So look, what we've been saying all this year, the robotaxi ramp will feel slow for most of this year. Don't be impressed by humanoid demos. Tesla's financials and sales will likely be underwhelming once the tax credit's gone. And after yesterday, for the most part, that's all still on track. So for me, I would say to keep your expectations in check in the short term, but long term, meaning the end of 2026 and beyond, is still looking great and arguably as great as it ever has. And I certainly still think the next 6 to 9 months are going to have plenty of excitement to carry us through, with the Roadster demo, more version 14 point releases, Banish, reasoning being added to the model, Cybercab test sightings, and another 6 to 8 new cities for robotaxi. So there's plenty there, but for the financials to improve, we still have time to wait. And I think for the next 3 quarters, we should be expecting some financials to actually deteriorate before they get better. And not to completely gloss over Tesla Energy, it's just something that we'll get into in future episodes, but for now, it continues to do incredibly well, even in the face of more competition and tariffs, policy changes, and grid connection queues, and so on. But in January this year, I said Tesla Energy was on track to do $1 billion in profit in a quarter in the next 6 to 12 months. And here we are, 10 months later, and Tesla Energy has done it. $1.07 billion in profit in 1 quarter, which I think is an incredible milestone for just a car company. And I have a list of some of the other topics like Megapack 4 and Tesla's AI compute that we'll touch on and dive into in episodes coming up. But for me, as a long-term investor, I am very pleased with what Tesla is focusing on and the paths they're taking. And you know what they say, the best things in life are are worth waiting for. And someone is out there buying the dip because this morning Tesla stock was down around $413 per share, and right now we're up at $446. That's over a $30 intraday move.